Why does price reverse after you enter a trade? Because bank hit this 8 o'clock candle scalping strategy from you. Today I will show you how to spot this candle step by step. We break down the exact timing to use using this 5 RR trade I took, using 20 trades I took. We show you how to avoid traps. This one stupid candle does what 100 indicators can't. This one candle scalping strategy involves only 2 time frames, the 15 minutes time frame and the 1 minute time frame. From your 15 minute time frame, you get one stupid 15 minutes candle formed at what 8 o'clock Eastern Standard Time. The last video I did, you guys were asking about the time, which video I did receive so many amazing comments from you guys that the win rate is massive. The timing is actually 8 p.m. Eastern Standard Time. In Nigerian timing, it's actually 1 a.m. guys. That is in the morning. This is what I mean. We know that the 15 minutes time frame prints only 4 candles, right? The 7:15 p.m. candle, the 7:30 p.m. candle, the 7:45 p.m. candle, and the 8 p.m. candle, guys. This 8 p.m. candle is what we want. So in Nigeria it will be what 12:15 a.m. and 1 a.m. guys. This is our opening timing. We talk about the closing timing later in this video. We want to take this 8 p.m. candle and we'll find the draw on liquidity. You simply ask yourself, where will you retail traders want to buy from in this candle at the highest points this candle got to? Once price what opens here and it goes above this high, there's something we call break and retailers strategy. Retailers, they'll try to buy from this level in the market, which they will fail. Meaning that these highs in the market is called what? Draw on liquidity, guys. We have 2 types of draw on liquidity in the market: the bullish draw on liquidity, the bearish draw on liquidity. The bearish draw on liquidity, we want price to what? To sweep the highs, and we want to enter and we sell to the next draw on liquidity. So for the bullish framework, we want price to sweep the lows this candle 8 o'clock candle go to, and we then target the next draw on liquidity. This is our bearish framework from the lower time frame. I'm covering the basis. We'll get to the advanced very soon. What you're seeing here is the one stupid candle, which is otherwise known as what? Our 8 p.m. candle, guys. We mark out the candle range high, the highest this candle go to, and what? The candle range low as what? As our draw on liquidities in the market. So wait for any one of it to be swept first. Can you see it swept this draw on liquidity? Make our entry and we would TP this next draw on liquidity. And can you see how price expanded to the downside, guys? For our bullish framework, our 8 p.m. candle has been formed at what? At our 15 minutes time frame, and this was our sweep, and we then enter, guys. Someone watching will ask, but Victor Snow, where exactly do we enter the market? That at the point of what? An order block. Entry, stop loss below it, and we target the next draw on liquidity, guys. Let's see how the market unfolds. We are in the setup, guys, and what? We ran to full take profit, guys. So this is one of the 20 trades I took recently with this. This is actually a 3 RR trade. So this one is good, just simple 15 minutes time frame. Today is what? 22nd July. This is midnight. We wait for our 8 p.m. candle to be formed. Here is what? 2 a.m. This is 9 a.m. guys, Eastern Standard Time, and this is what? 14 o'clock, which is actually 2 p.m. 13 o'clock is 1 p.m. Now we are currently at what? 14 o'clock. We are targeting what? 20 o'clock, which is 8 p.m. Eastern Standard Time. So this is 19 o'clock and this is our 20 o'clock candle. This is our one stupid candle. We mark out the draw on liquidities, which is what? Our candle range high and what? Our candle range low, guys. Then we then move to the 1 minute time frame. We need only 2 things from this 1 minute time frame: a sweep and what? A market structure shift, guys. And if you look at it, this confirms our market structure framework we've been talking about: a sweep and a market structure shift. Then we then mark out our valid order block. Our order block, make our entry here, stop loss above the order block level. We target a 1:2 risk to reward ratio for partials, and we target the next draw on liquidity as full take profit, guys. Let's see how the trade unfolds. Can you see the market was tapped us in? We hit partials, guys, and that's a full take profit for us, guys. So the time of filling us in is very, very important. This actually feed us in at what, 2028. Anything above 10 p.m, no entry. If this video is helping, like and subscribe right now, and if you have any question about this strategy, drop it at the comment section. Let's look at our profitable order block framework. An order block candle is the last candle before the market started going up. So this is our first candle, this is our second candle, this is our third candle, and this is our last candle before we made this impulsive move. And we mark out the highs and lows of the order block candle as our order block. We will make our entry above the order block, stop loss below it, and we target to the next show on liquidity, guys. So already know, not every order block candle in the market actually works. That's why we use our structural framework to differentiate between order block winners and losers. We want a sweep and a market structure shift, guys. Then we can mark out our order block candle to trade from. It's from candle's perspective. This is the sweep we had, this is the market structure shift we had. Are you guys following up? Let's look at the 1 minute timing, guys. When our order block candle forms at 8 o'clock Eastern Standard Time, we want to start looking for our market structure shift up to 10 p.m. Eastern Standard Time. This makes sure we win every single day, because this is a scalping strategy, which our 10 p.m. Eastern Standard Time, if in Nigeria 3 a.m. Once this 8 p.m. candle forms, we start looking for our trade. 8:01, you can go to 8:02, still looking for our trade. 8:30, you guys understand what I'm saying? 9 p.m. once it gets to 10 p.m. we stop. Within this time window, we expect only two things: a sweep of any of the draw on liquidities, which in this scenario they candle range high, and a market structure shift. We then mark at our order block candle right here. If you check, this is also represent our structural framework of sweep, market structure shift. So we then enter at this order block candle to the downside. Again, if we are still unable to retrace to our order block candle within this our time window of 8 p.m. to 10 p.m, we'll come back the next day and pick a new 8 p.m. candle, guys. This is what I mean. While we are waiting for this order block to fill in, and we come and fill it 10:01 p.m, we'll come back the next day and find another 8 p.m. candle, guys. This video builds up on one stupid gold trading strategy. Watch that before this one. Let's take some example. This is gold. This is our 8 p.m. candle, 20 o'clock. This is our candle range low, candle range high as our draw on liquidity, guys. We move towards the 1 minute time frame, guys, and can we see we already had our sweep, guys. Anticipate a market structure shift. This is our market structure shift. Again, this aligns with our structural framework of read and market structure shift. Watch my market structure video. All of this builds up on these, guys. See, this is what I teach you guys: previous high, previous low, and we did our market structure shift. Mark at our order block candle, make our entry, upload below the order block candle. Target 1:2 for partials. This high for as full take profit. 1:5 risk to reward ratio, guys. Feed us in with this week. We take our partials, we break even, and let the remaining run towards full take profit. And can you see market cost out as break even, guys? And this is totally normal about trading. You don't win every single trade. Don't frown at break even. Break-even losses are actually the tuition fee you pay to learn the art of trading. So Oladiji Samuel said that he backtested this strategy, that he wants us to improve the win rate. Let's see. This is gold, 15 minutes time frame. This is our 8 p.m. candle. Mark out the draw on liquidity, which is our candle range low, our arrow hedge. We then move towards the 1 minute time frame, guys. This is our sweep of this candle range low. We know the next thing is wait for a market structure shift to target this candle range high. And can you see this is our market structure shift right here. We marked out our order block candle, guys. Make our entry here, stop loss below that other block candle. I will target a 1:2 for partials. I'll let the remaining run to this highs as full take profits. Can you see how market would return back to our other block candle, move towards our partials before finally running to our full take profit, guys? So this is 1:4.5 risk to reward ratio, guys. Most important thing, look at the time this feed us in. This is 22:03. Something to use and improve our win rate is understanding our candle range theory model from the 15 minutes time frame. If you've not watched my candle range videos, started from the basis, watch I finally cracked the ICT candle range theory to understand this concept more. So this is our 8 p.m. candle right here. This is our candle range low, this is our candle range high. Can you see how we swept this guy immediately and we ran immediately within 8 o'clock to 8:15? That means that we had impulse in the market. Look at this particular candle, 8 o'clock. Can you see that 8:15, 8:30, we've not swept this this is our candle range low. It was around 9 o'clock that we had our sweep. After that, we ran towards the next draw on liquidity, guys. Look at this one, 8 o'clock, 8:15, we swept it. 8:30, we ran to the next draw on liquidity. Again, this is our trade that we took. It aligns with our 15 minutes market structure. Can you see we had our break? This is an other block level. Combining it to improve your win rate. I'll talk about this in our next video. I'm Victor Snow, and this is trading from the soul. We are take complex ICT concepts and I break them down in a way even a 5-year-old can understand. If this video helped you improve even a little as a trader, show me some love, like and subscribe, because this video took me time to make. And besides, you don't want to miss out on future videos. Always tell me a video you want to see next. It helps me make better videos for you guys. If you're serious about learning ICT concepts and stop blowing your accounts, this is where to start. Candle range theory for beginners, which I started teaching the basis of candle range theory, and currently now we are in advanced. Next video in this series is one stupid 8 o'clock gold candle strategy that made me unstoppable. See you guys there right now.